We're really excited because we actually have one of our very own, Jeff Baughman, who's going to actually be talking a little bit more about kind of like I guess a year-end review or reflection on everything that's going on and actually what's actually yet to come. He is an Army veteran, so of course I won't hold it against you, even though he is an attorney, could probably handle me for saying something like that. Anyways, we're going to just talk about some things about what the future actually holds. Politically, financially, and maybe some points that we can take away and implement ourselves, hopefully. So Jeff, thanks so much for doing this for us today, man. I'm going to actually let you roll with it, start kind of touch on those points, and we'll get any questions that are out there that we can maybe answer today.
No problem, Elmer. So yeah, part of my practice is I deal with businesses all day, every day, and I've been fortunate to work with many veteran-owned businesses and see some of the challenges they're facing and the things they're overcoming and the successes they have, and been very, very fortunate to be part of that and glad to be part of that here with FAVOB here in Tampa. When I was thinking about this, I tried to contemplate what I want my clients to know and for them to succeed going into the next year. And, the first thing, kind of overall, I'd like them to remember is where they came from. Because I think the number one challenge right now is there's a lot of uncertainty. There's still some election outcomes that we're still waiting on. And even just whichever way that ends up going, there's a lot of uncertainty in how the law is going to be applied and if there's going to be new ones next year. So kind of go back. In the military, what did we do when we still needed to get something done? We didn't know what the landscape looked like. Well, we gathered information,
right?
And hopefully I can give some of that today, at least a little bit, and we made a plan and then we executed. We didn't need a ton of information. We were actually able to do that and proceed in that uncertainty in such a manner. And I think that's a strength for all veterans, especially for veteran-owned businesses. So starting off, I'd just like to remind them of that. Yeah. So no matter their opinion or their fears, just, hey, do what you know how to do and execute.
And not only that, I guess be flexible, right? So as information continues to come out, right, then we're actually able to lean on colleagues, professionals such as yourself, right, that we can then make that adjustment, that pivot that's probably overutilized right now during this pandemic, and then just go ahead and execute on or incorporate it into the plan and then execute from there.
Absolutely, and gather a team. I'm a big believer in that. We never did anything alone in the military. We had different S shops, I don't know what they call it in the Marine Corps, but we had these advisors around us who were specialized in certain things. Get those together, get those people together and ask them their opinion on, hey, this is what I'm trying to do. What do you see coming down the pike? And work together with them to help flesh that out.
Absolutely. So why don't we kind of get into a few points now. I guess one of the things that people are wondering, right, you had kind of alluded to it, right, the impacts of the election in the future, right? We'll kind of hit that one out the gate and then maybe touch on a couple of things of what we can actually, from retrospective, right? So how do you think that the election or even the uncertainty of the election is going to actually impact 2021?
It will be a delayed reaction. And right when we're talking, for everybody else, it's mid-December in 2020. So we have a lot of states that have certified the election for President-elect Biden. And we have probably, I think what's the most important thing is we have a runoff election in Georgia for a Senate seat. And because really what's going to happen is, my thought is that we'll have a President Biden and we're going to have a split Senate. I feel like that Georgia seat's going to end up staying, and what that really means is, are we going to get any new laws? That's going to be tough. It's going to be, and that's really probably, so if there's one thing that hinges on is, are we going to have new legislation?
Right.
And kind of from a higher level, why that's important is because Congress is the one who establishes the law, President ratifies it and executes it. So when they disagree, which often happens when we have different political parties in control, then that legislation doesn't get passed. But what we do have is all these agencies. All right, these are going to be under executive control, as they have been for the last couple hundred years. And these agencies don't require necessarily congressional authority to promulgate rules and to enforce. So if there's one thing I'm really looking at and I'm thinking about, it is not so much that necessarily it's going to be new laws, but it's going to be new guidance and necessarily new rules. Now, for most of us, that doesn't seem like a big deal, but we're not going to have some kind of major shift in legislation necessarily. It will be probably a shift in how that legislation is carried out and the type of rules that are under it.
So based upon kind of what you just stated right now and maybe what 2021 is holding for businesses ahead and really even incorporating, because you kind of alluded to that as well, as kind of like just what political history shows us, right? Kind of how does that really impact the small businesses or the better known businesses day to day, right? I mean, it's again, as you said, what you said at the very beginning, right, is just stick to the plan, continue to execute. But how much, I think one of the fears that many small businesses has is what is this, how is this going to impact my business and how can I move forward? Like, what would you say to that or reiterate from that perspective?
I mean, number one, stay up to date. Stop watching the news and start reading, differentiate your sources because, I don't watch the news, but I stay up to date by looking at things that are a little more technical in nature, and I think people are doing that. And it's a hard question to answer outside of context, and I usually try to bring an example. So a question that's coming into our office a lot right now is vaccinations. The COVID vaccine is starting to roll out here in December, January, and the question to kind of look at how this stuff works in context is, am I required to, or can I require my employees to be vaccinated as a condition for employment? So what we look at right now is, what kind of laws apply in there? Okay, so we have different agencies related to health, but most importantly is OSHA, so workplace safety. All right, so one interesting thing under the Trump administration is the Undersecretary of OSHA has been a vacant position for the last 4 years. So we can sit here and speculate why that might be and, things like that. I leave that to the pundits on those news channels. But the result is that a lot of enforcement and a lot of sub-rules related to pandemic have not been made.
Okay.
And I know that President Biden has proposed, and I think will in fact fill that position very quickly, as a response for, in this particular case, that one example, but it's going to spread to a bunch of other ones. So the general rule of thumb right now is, can I require my employees to be vaccinated? Absolutely. Can they refuse? Absolutely. It's an at-will, at least here in the state of Florida. Right. We have at-will employment. If it's something that the employer wants to do, they can absolutely do it. And if the employee doesn't want to do it, they absolutely have the right to leave. Our general guidance is, provide some forms of medical or religious exemptions for these things. Absolutely. But in terms of the election and the way things are going to go next year, I think when we have this OSHA position filled out, we're going to get a little more guidance on what those exemptions might be versus kind of leaving it up to the discretion and free will of the employees and the employers to figure out. So good or bad, I don't know. It really kind of depends on your viewpoint, but we don't want to step outside those lines because right now we have this kind of at-will, into our discretion rule set. But what happens when it becomes an OSHA rule? Right now we have a whole different set of liability and fines and enforcement available. And, so it's going to be changes like that. And what people are asking is this new? No. Right. We've all had vaccines. Most of us are military. We've probably had them multiple times. That's okay, so are we requiring our employees to get measles, mumps, and rubella? We're not even requiring them to be anthrax, but our employers at one point required us to get those things. These issues are not necessarily new, but maybe I think what's going to happen is because of the pandemic response, we're going to find a different way to deal with that, and we just don't know.
So I think, I guess it's safe to say that we still operate within the confines of the rules and regulations that are, enacted today or that are enforced today, right? and then that we just need to be able to better understand what we want to do as a business, right, to move forward to either what we believe is going to be safe for our business, for our clients, or the employees, and then seek that guidance, that appropriate guidance to implement those requirements that you feel like as a business that you have, which is, I think, is a great opportunity for us, is that we do have some sort of flexibility to impose certain rules for our, for our own businesses. And then whenever those rules or regulations come into play or are updated or changed, or now enforceable, then again we adapt, right?
Absolutely.
Are there any other examples or questions that you're getting into your office, kind of similar to that maybe would be good to bring to light now?
One, and it would probably require maybe a little bit more explanation, but it is one of the questions that I was asked before being asked to speak today, was on the independent contractors.
Oh, yeah.
Because kind of the state of the world right now is we generally classify workers into one of two categories. They're either a W-2 employee, they're paid a wage or salary, and the employer pays payroll taxes on that, and the employee pays their side of that payroll taxes. Or sometimes they're classified as 1099 or an independent contractor. Okay? Why do people want that? All right? A lot of people, especially in smaller businesses, startup businesses, they would rather have a 1099 worker, because they don't have to pay payroll taxes, and they have a lot of lower insurance requirements. Workers' comp goes away, things like that. So generally, it saves them money. Mm-hmm. So, and this goes to my point on, I think one of the trends we're going to see is aggressive enforcement, not necessarily new laws. So I believe it was about 2015, 2016, Congress decided to make misclassification of independent contractors a criminal penalty. It's always been, there's penalties associated with it, but it's now a criminal act to intentionally misclassify independent contractors as employees. What I've seen so far is a push for working together with federal and state agencies to enforce these. Mm-hmm. So kind of the way it works now is we have this standard on what is it over here or is it over here? So the Division of Workers' Comp for the state of Florida has their set standards. The Division of the Unemployment for the state of Florida has their standards. The Department of Labor on the federal level has their standards, and the IRS has their standards. None of them quite match up, and because we do have this separation between our federal laws and our state laws, I don't think they'll ever quite get there. But if I run afoul of this agency down here, they don't talk to this agency up here. Okay. So while I maybe if I get caught or I'm doing something incorrectly, even inadvertently or negligently, this doesn't really interfere over here. But what President-elect Biden has proposed is creating basically an interagency task force. So me as if I was a business owner, I think the last thing I would ever really want is unemployment, Division of Workers' Comp, the IRS, and the Department of Labor all working together and talking to one another. I can't imagine that's a good feeling. So again, what can we do? We have this uncertainty. We don't know what's going to happen. We don't know how hard they're going to come, things like that. What can we do? We just work on our understanding of what these laws are. Mm-hmm. And how to properly classify them as one way or the other. So my general rule of thumb in classifying them is if it walks like a duck and it talks like a duck, it's a duck. Right. Because we're never wrong when we classify them as an employee, but sometimes we're wrong when we classify them as an independent contractor. Gotcha. So the workaround that I don't think is going to work as well anymore is, well, we'll just call them this. We'll have them sign a piece of paper that says, I'm an independent contractor, and the world's okay. An example I can use is there's a business that I know in Texas who is a roofing business, residential roofing. They have 31 people that are laborers on these roofs, and they have 30 independent contractors working for that company. Right. But they all have this piece of paper. I do not feel that situation, and that's a general, obviously, situation, but I don't feel that situation is going to withstand the scrutiny of extensive enforcement by these other agencies. And to kind of put it in context with related to your first question was, this is nothing new. I mean, we have this administration coming in on one side this year, in one or two in other election cycles, it'll be somebody else. These things go up and down on the amount of regulation versus deregulation for all of our history. But I do remember when President Obama took over in 2008 and started, and what happened was that he decided to get in with the Department of Labor, and the number of investigators working for the Department of Labor tripled in a matter of a year and a half.
Very nice.
Next thing you know, I'm on the ground over at the VA hospital that was being built at the time in Lake Newman Drive, doing Davis-Bacon audits. And so this would be another example of, to put it in context, and I remember talking to those clients and they said, well, this is all the president's fault, I didn't know about these laws, things like that. Well, too bad. These laws have been on the books for a long time on what a proper classification of an employee is. And not only that, for Davis-Bacon Act requirement, if you're working on a federal project, you have to pay a certain wage to them for a certain type of job position. And if you're not, you're subject to audit. Now, so agree, disagree on the politics, that's fine, but the law hadn't changed. It's just now we're aggressively enforcing this because that particular president decided he didn't want to necessarily raise taxes too much, but he still needed money coming in.
Right.
So one of the challenges I see, whomever is going to be president ultimately, is we've just shoveled out almost $3 trillion towards coronavirus relief. It has to come back from somewhere.
Right.
So I do see some changes there, which kind of leads me into one of the other points, which is one of the tax changes. So in 2017, we had the Tax Cuts and Jobs Act passed by Congress, and it basically it was probably the largest reform of the tax code in a generation. As far as businesses are concerned, our corporate tax rate went from about 35% down to 21%. Huge advantage.
Right.
So I've been busy making regular corporations into C corporations because of this crazy cut. Now, one thing I've kind of read, and we can all sit here and speculate, is President Biden has run on a platform where he wanted to take that back to pre-2017 rates, which was about, like I said, that 35%. I don't know that that's going to pass necessarily because we possibly will, and most likely will, have a split Senate and versus the presidency. But I have seen some support from some of the, publicly stated from some of the Republican senators towards an increase, but not a vast increase. So I have a feeling that tax rate is going to settle somewhere maybe around 28%. Because, at the end of the day, we all run businesses. We understand money has to come in for it to fund operations. So where are they going to get it from?
So I guess I thought it was really interesting that you had stated it was really not about new regulations, is really more about enforcing the ones that are currently, on the books now. So again, it then goes back to what you're saying before, is build that team around you, right, so that you can ask those questions, right, execute appropriately, and quite honestly, don't try to, as business owners, a lot of people believe that being a business owner, you have just a ton of loopholes that you can go through, but those loopholes are the things that can actually get you in a lot of trouble if you're not aware or have the right team around you to execute things appropriately.
Yeah, and you'll probably hear a common theme through most of what I'm saying today, which is compliance.
Right.
All right, so compliance is, we hear it, maybe we have a negative reaction to it, I'm going to have to comply with something. We comply with things all the time. But I have to know about it, so I need to educate myself. I need to understand how this impacts my business, and I need to understand what steps I need to take to mitigate this possible liability, this fine, or this government action. There's nothing wrong with that. We do it all the time. We just don't want to do more of it. And I think that's the struggle. People are like, I'm tired of doing more. I don't want to do this anymore. I get it, but I think that's just a reality that we're going to have to deal with moving forward into 2021. Those are two particular issues that I see coming up. Is an enhanced impact of the Department of Labor. I also see this on the IRS. I was talking about President Obama enhancing the Department of Labor investigators, the IRS between 2010 and 2019 has dropped about 20% of its employees.
Wow.
But now we have an agency capable of bringing in more money to pay back this coronavirus relief that has been depleted by the number of investigators. I see that coming up. And so it's, okay, where are they actually going to be auditing and looking for this money? And one of the things that's been speculated about and has been pushed forward by under the Biden platform is issues related to S corporations. So many of our business owners they elect to be taxed as a subchapter S corporation. Great tax structure because we can avoid that. Paying that currently 21%, just speculates that it could be 28% tax rate, and then getting taxed on our personal distributions as well. We can have that pass through and only paying once. That's great, but there's rules associated. And it's not that these rules are going to change, but it's, are we actually doing it the right way? So it's pretty easy to know if your corporation has under 100 shareholders.
Right. And then, so again, it goes back to enforcement, right?
Yeah, absolutely. And I see that coming because I think one of the places in specifically, we'll kind of get down in deep a little bit on S-Corps, because there's some easy answers. We know if they have 100 shareholders, we know if they're U.S. citizens or resident aliens. That's an easy requirement. We know if they own another S-Corp, we can't do that. Those are pretty easy compliance issues. The question comes down to, okay, the money that individual shareholder took, are they paying all the proper taxes on it? Well, what are they obligated to do? If you're an owner-operator, you have to pay yourself a reasonable salary.
Right.
Okay, everybody knows that, and then the question always comes, what is a reasonable salary? And all the tax accountants I know, all the attorneys I know, we all scratch our head because there's very little guidance on that.
Right.
And I think up to today, or at least going into this new year, is we've had a lot of leeway with that, So I think there's some games, and then how often am I taking these distributions of profit? Is it really a distribution of profit, or is this a disguised paycheck that I'm not paying payroll taxes on?
Right.
And that's really kind of the question. Because I have a feeling they're going to enhance enforcement, more aggressive enforcement, and they're going to be looking at these things. So how often am I taking these distributions? Am I documenting it in company meeting minutes that this is a profit distribution, not a disguised paycheck? Or am I just willy-nilly using my debit card and then calling it a profit distribution because I own the business and I can do whatever I want with it? I have a feeling that's going to get a lot more scrutiny than it has in the past, It doesn't necessarily change the rules, though.
Right.
So now I would stay up to date because it hasn't happened with the S-Corp guidance yet, but with the Tax Cuts and Jobs Act of 2017, that was 3 years ago now.
Yeah.
Okay. The IRS is just now issuing their full guidance on this, and that was full guidance for the last 3 years on the Trump administration. So on top of how big the U.S. tax code is, just the guidance on this one act is a little over 1,000 pages.
Wow.
And again, we go back, get your team together.
Right.
Don't call me, I'm not a tax person, all right?
Or we can go to school and become a CPA, and I'm pretty sure we still won't even completely have a full understanding of the tax code.
Question from the audience. So as an S corporation structure, how often should one be taking withdrawals from the company?
Monthly, quarterly, documented saying it is what it is. What I also have always liked, and I don't think it's difficult, is there was some thought put behind what that reasonable salary determination is. Here's the series of factors I looked at. Here's the equivalent jobs. And most honestly, most S-Corp owners are doing 5 jobs. They're the chief of marketing, they're chief operations, they're the chief salesperson, most small businesses. But this is how I got to that number. So for example, when I had my own business, when I ran my own law firm, I said, okay, here's what a public defender makes, which is very little. Here's what a big firm attorney makes. Yeah, I'm going to go on the lower end, but not the lowest end. And that was kind of the rationale, because think about it at the end of the day is we're going to get away with things on our tax returns for years. They're not going to look, I think they're going to start looking. So I have to contemplate that situation where I'm staring at an auditor who wants to make something happen, and I need to have a straight face argument, and it's just a smell test most times. You know, when you see that person who's like, well, I only paid myself $25,000 because that's this and that and the other, which is maybe fine. You know, maybe if you're a school teacher, unfortunately in the state of Florida, you know, that might be fine. I know they just got a pay raise.
So it's 25.5 now.
Right, yeah, exactly. But, you know, those are the things. I would have, you know, basically, when I decided to do this, this is my rationale, and this is what I thought about. It wasn't at the whim of when I decided to kind of swipe that debit card. Now, you're talking to somebody who personally bought a set of golf clubs out of this business and, you know, use that, you know, took it as a profit distribution. So I've done all this, and, you know, I probably wouldn't do the same thing next year.
Yeah, so I think one of the things, the key takeaways to that is that the government, or, you know, our municipalities and our federal government, like, the money's gonna be collected from somewhere. So it's either from taxes, from fines, from fees, whatever it actually may be, is that the money will always be there. So if we're constantly talking about, and also I think, just generally speaking, it's always gonna be about the laws or the regulations that are already on the books now, right? The ones that will change later on will probably, like you said, like 3 years later, right, the guidance came out, right, and it's there. So I think we just need to be prepared, and I think it's valuable to have somebody like you here kind of providing us a little bit of insight professionally on how we should, you know, execute our daily business. Any other questions? Or that was good? All right. So we talked about independent contractors and all these things, but what about, is there any update or maybe kind of hindsight to talk about regarding like the PPP loans and, you know, those the relief funds that were provided to small businesses?
Yeah, and this is not a hot and heavy issue right now as much as it was when the program first rolled out. They stopped accepting applications for loans August 8th. So now what we're seeing is people seeking forgiveness.
Right.
And, you know, there's been, again, it's just new guidance. We have this thing that came out. We didn't know how we were going to do it when the Small Business Administration started issuing EIDL loans and their lenders started issuing PPP loans. So it's really staying up to date on the guidance, but I know a ton of people who've gotten the forgiveness already. It's fine. The one thing I will note that is kind of up in the air is there's an interesting little quirk relating to the deductibility of expenses paid using PPP money. And I'll kind of like simplify it down because I'm not that smart. I was in the infantry, so I draw pictures a lot. But I do.
Then you should write a book for me.
Yeah, pictures and words, pictures and words. But, yeah, so basically, the general rule of thumb is you can't double up tax benefits, okay? So typically when a loan is forgiven, that forgiveness amount becomes taxable income. So if I borrowed 100 grand, somebody said, no, I'm going to go ahead and forgive that.
Gotcha.
I have to pay taxes to the IRS on that 100 grand. Congress specifically exempted PPP loans from that. And they say, no, you do not have to pay income tax as a business on that. Great, tax benefit. The IRS has taken the position that you cannot then take a deduction if you use that money for payroll expenses, which you're supposed to do for 60%, mortgage interest, and a few other isolated things that you can use it for. You can't then take an additional deduction for the expenses that you otherwise could. This is being fought over. There's a bill pending to fix this because as a general rule, this has been the case, but I think because of this pandemic relief and we had to roll it out so fast, that's kind of up in the air. And I know there's a major association, like Association for Independent Contractors, or Association for CPAs, independent CPAs, is really up in arms over this because we don't know, you know, and as we're rolling into, you know, January 1st is coming up soon, as we start rolling into tax season, you know, our tax professionals are going to need a little more guidance on that. And I expect that to come soon. I have a feeling that's going to be one where they recognize the intent, but again, this goes back to my theories on kind of government action is the IRS gains no benefit by allowing this. They're going to have to be forced by our legislature to permit this because they, you know, despite my personal views, but they feel like this is what the law says. We have to do this exactly the way it says unless we're told otherwise. So
it's still no double dipping. actually, right?
Well, I mean, it's going to be specifically, yeah, I mean, I think that rule's been around and they're doing that, but I think they're going to allow it in this case.
Right.
It just hasn't been passed yet.
Gotcha.
So I know some people have held off on the forgiveness because of that. Okay, I don't know that it really gets you anything because it's either going to be yay or nay.
Right.
I think maybe the interest might outweigh the $300 or whatever, depends on how much you spend on PPP money.
Right.
That deduction, that you could take, somebody has to sit there and do the math.
Right.
And again, that's where you sit down with your advisor and say, okay, I see
What's the
the
best course of action?
absolutely, I see this gray area, but if I go over here, what's my liability? If I go over here, what's my liability?
Mm-hmm.
And in the meantime, if you're unsure, I think it's fine to hold off. Got a couple months, and I'm sure you can file an extension on your taxes until Congress comes in and fixes that.
Take that calculated risk, I guess. Right?
Absolutely, yeah.
Yeah. So I know you've talked about a lot of different things, and again, it's been extremely valuable, and you've talked on, a couple of things to look forward to, or at least look out for in 2021. Is there anything specific that maybe you want to point out in addition to what you've already touched on for what we should be looking out for in 2021? He's got a book. We might be here for
wrote it down.
Let's sit back now. But I think besides the enforcement thing, right? So the enforcement point is saying, hey, listen, there are regulations already right now, right? There are laws in place that we have to make sure that we're abiding by. Get the right professionals, and I think we can stress that, the right professionals to help guide you. But in addition to that, what else do you got?
So there was two other items I wanted to note as far as tax changes. I don't think this is going to impact a huge number of people, but it is something to pay attention to. But this is one that would require congressional action. And again, that's kind of up in the air, is there's been a huge push from the Biden campaign to vastly reduce estate taxes. So as it stands right now, as an individual, I can exempt $11.58 million of my wealth from estate taxes to the federal government. That's a significant amount. For most people, they'll never reach that, and we don't ever have to worry about it. They want to take that and drop it down to about $3.5 million. Okay, so where does that come into play? Why do I care for most small business owners? Most of them are not liquid enough for that to really be matter, but we do have this business asset. And me at my age, my business asset may be worth very little, and I say this doesn't matter, whatever, give it 20 years. Right. Now, does $3.5 million sound that crazy? Probably not, and then I could end up in that scenario. So that's one that's being proposed, that's been talked about. But again, this is where it requires that congressional action. That would be a major change. But for most of us who want to get involved with our legislature and communicate with them, what I would encourage them to do is stay on top of that, because this may not impact you right now,
right,
but most of us got into this to make money and accomplish whatever our business is trying to do. That could grow there very quickly,
yeah,
and that could come into play. And I can see that one really vastly impacting that. The other one is to take kind of a look. I mean, a lot of people take a negative, it just really depends on your party affiliation. We have a Democrat presidency coming in. Some of the things that they're pushing for, whether you agree with it or not, are opportunities as well. So, there's been a lot of talk around energy efficient programs, continuing tax benefits for electric vehicles, renewable resources. So if I'm kind of up in the air where my business needs to go and where I want to push and where sectors, and I'm starting looking at sectors, it's going to be things like that. And those are opportunities. So whether you like the president or not, or the president is incoming, that's fine. You still can find a way to make money.
right.
So it's one of those things. I would look at some of those sectors and see what those changes and what those benefits are, because I think they're going to continue to grow as under this administration.
Actually, like kind of that last point there is just taking a look at the opportunities, right? Is understanding that there may be a lot of things up in the air and that we have to really kind of evaluate and get the right team around us. But the fact is that there's always opportunity, right? And I think that us as veteran-owned businesses and our employees, we can really relate to that to say, okay, well, where's the next opportunity? So let's start, putting the right team together and tackle that issue.
Absolutely, and I think veterans are well equipped for that. We're used to changing environments, we're used to taking advantage and moving opportunity. What I discourage people to do is they get very scared, so they want to stockpile and lock themselves away, and they feel like the boogaloo's coming and things like that. Instead, just take a look at the business opportunities out there, and see the landscape for what it is. You don't have to like it, but you can see it for what it is, and then go forward and execute on those opportunities.
I think that's awesome. And with that, I think that was a great end to our, we have a question, another question. Go ahead. Or any other questions?
What have you heard about, or can you enlighten us about 1031 exchanges and opportunity zones?
It hasn't changed, and again, this is kind of my general point on what would require congressional action. So I think maybe 1031 exchanges won't go away without that, but that has been asked for and pushed for. So depending on that runoff election in Georgia, that's really the one that concerns me with that, because that's been, and for those who don't know what a 1031 exchange, it's a like kind of exchange. We oftentimes use it to exempt cap gains tax on real estate purchases. So a lot of people feel like this has been a tax loophole. This is basically the same thing we do in the state of Florida with our homestead tax exemption. We're allowed to take that and roll it over into our next home. For some reason people are fine with that on their property taxes, but they don't like it on their, income tax that they have to pay. Now saying that, I do feel, again, kind of my position is on the cap gains that will go up. Maybe not, and I think maybe it will be an income-based determination, which would, kind of ancillary, I don't think that's a word, but related to the 1031 exchanges. And the opportunity zones, they've been rolling, and I think they've been successful. And again, this is kind of like my, theory with the renewable resources and energy efficient sectors is those are places to look. We do have typically larger infrastructure type projects and opportunities and tax benefits for qualified opportunity zones that would flow better under a Democrat presidency. So I definitely see that increasing.
Any other? Go ahead.
Sure. So I work quite a bit with the private security industry, which is rampant with the 1099 labor. So much so that the state of Virginia actually in 2018 made it illegal to 1099 security staff. So what I try to educate a lot of my guys is that the minute you schedule someone when and where to be per IRS regs, they don't qualify as a 1099. Is that?
I wouldn't say that's 100% accurate. And so the question, if we need to get it for the video, is, the minute I schedule somebody and I tell them where and when they have to be, that I'm in violation of some IRS regulations. Sort of, but not really. So what the IRS looks at is three basic categories of things. They look at behavioral control, which is what you're talking about, financial, and then the relationship of the parties. So a great thing to do if you're not sure on a large scale, if you want to make a large scale decision, like if I ran a security company, is I can get a determination from the IRS. It's a form SS8. And even if you don't want to actually come up on the IRS's radar, if you Google form SS8 and look at the questions that they ask, these are the types of things that are being considered. And that is absolutely one of them. I can have but if you think about it this way, if I'm the example most of us are familiar using with independent contractors is a general contractor building a house, they have a subcontractor as one of the trades. They absolutely can tell them when and where to be. It's really who controls the means and methods of how that's done. And I think usually with security workers, a lot of times that can change. Now, I can hire a security team for my business, but that business itself, those are typically more employees. And it sounds to me like the legislature in Virginia just made a blanket determination. A lot of times the questions we get is laborers. That's usually, is this more of a labor job? Am I controlling what they look like? Meaning, am I giving them a uniform? Am I providing them training? Am I providing them a vehicle? These levels, it starts really shifting more there. And again, that rule of thumb, if it looks like a duck and walks like a duck, it's a duck, really comes into play. There's no perfect determination. Now, my guidance is going into 2021 and probably more likely 2022 is if I'm going to err on the side of caution on this particular issue, because I have a feeling, because why do we care? Because nobody is paying payroll taxes on that money. All right? Nobody's regularly paying that. We're relying on that independent contractor to pay it on their personal income taxes, but they like doing that because they can take other deductions and it lowers their taxable income. So it reduces the tax base overall. And I have a feeling we're going to need some of that money to pay back all these PPP loan forgiveness that we just handed out.
Trillions.
Yeah, PPP itself was $585 billion, I think, just that.
Wow.
And we're sitting on, I forget how many billions of dollars the state of Florida hasn't even implemented for pandemic relief. So this money has to come from somewhere, and that's absolutely a place I see it coming from, for sure. Other questions?
Any other questions?
What's your Super Bowl prediction? That's what I want to know.
So what, Super Bowl?
Super Bowl prediction.
I stay on football. I've been
I think it's
in,
going to be in Tampa.
yeah. I would not even throw that out there, as far as football, so, yeah. I would like to see the Buccaneers play, but I got excited for the first 6 games and then I refuse to watch it now. It's a very disputed relationship.
Wow. You and me both, man. I'm not, my team is not even remotely close to it, so I'm not even gonna get in there. Well, again, Jeff, I appreciate you coming out here, man. So, if anybody has any other questions, reach out to us. FAVOB.net, we're the Tampa chapter. Jeff Baughman here, who is a corporate attorney and one of our board members. Again, thanks so much for being here, man. And for you guys out there in TV land, let's catch you guys soon.